for sophisticated takes on the crypto markets. It's May 7th, and here in the studio is JJ of J Labs, all by his lonesome, ready to get grilled for the next hour. I'm your host, Marconi White, and on today's show, I'm asking if 2 days of GBTC positive inflows is what's driving this BTC rebound. We're going to find out, but first, it's rapid fire, where I look for simple answers to complex questions. Let's get started. JJ, you ready? You're all here alone.
I'm ready.
You're in the hot seat. Okay. So we'll kick it off the first one. 2 days of GBTC inflows totaling 63 million. Is GBTC back, or is this a blip?
I think it's a blip in the short term for GBTC. I think that'll continue to trend down over time, but it's definitely a good sign for the market that those outflows have stopped, at least temporarily.
All right, I'll send a note to Barry. He'll probably cry a little bit after your prediction. Life goes on. Best trade of 2024. Has it already happened, or has it yet to come?
Yet to come. You got to believe it's coming soon.
You got to believe no matter what, right?
Yep.
Okay, there's the excitement. You know that you're all here alone by yourself. You got to be excited. You got to be ready to take on the world. All right, ETH ETF approval 2024, 2025, or never.
I'd say 2025. I think it's going to take a little time, but it's coming.
You got the max.
You have to let the courts, have to play it out and whatnot. I think when Grayscale first sued the SEC, it was like early 2022, and that took about a year and a half. So we're probably looking at something similar here.
All right. Well, I'll add an extra question here. What do you think BlackRock does? Do you think they withdraw their submission for August?
Most likely, yeah. Or I don't know. Yeah, I have no edge there, but I would say it's probably not going to get approved in August. So something will happen to push or delay it somehow.
There's going to be a lot of sour grapes. All right, easy alpha. Every trader is leaving on the floor right now. What is it?
That's a good question.
This is rapid fire. Rapid fire. What comes to mind? Is it juicing up? Is it getting rest? What is it?
Yeah, I think just taking the time, digesting the range, and just knowing that the next breakout is coming, right? So just kind of being patient and waiting for it. And like we were saying last week, just having that sniper mentality where you sit and watch and wait and wait and wait.
Yes,
know it's coming.
I had a visual of sitting in some foxhole, urinating myself, waiting for that trade. It was glorious. All right, next one. We've talked about it before. ETH Sol is the bottom in.
No, but it's getting close. I think it might retest it. Looking at the chart now.
I'm gonna have to revisit that one. Last one. We got Eric Balcona says 95% of ETF hands held during the last week. Is it still too early to call these diamond hands?
Yeah, I'd say so. Let's see what happens if we get a wick down to 52K or so, and then if they can survive that, I'll call them diamond hands. But
all right,
not sold yet.
You're not sold yet. You're like another man. I think is it Blanco? Who's been going after Eric, I think, for the last quarter and change, trying to get him to admit that these people are just degens, which is kind of funny. All right, well, let's move in. We're going to open up and go directly into the market update because we've had some interesting price action. There's a lot to discuss. Before we do that, I want to give a shout out to Light Signatures, Mr. Preet, Antoine, Paul J, KS, Ali Alba, Hello World, and Nadeem T. Thanks for joining us this morning. Welcome. Definitely hit the like, subscribe button, share this wherever you talk to people about crypto on your text chains in real life. It doesn't matter. You want to hear some avatars in your life. This is the time to get it out. All right, JJ, we got some interesting price action, as I just said. Last time I think we were talking was on Thursday. Bitcoin was around, I want to say 58, maybe it had shot up a little bit. Definitely felt like it was going to be sitting under 60K for a while. Today, when I looked this morning, Bitcoin at 63,586, Ethereum over 3,000, and Sol having a little bit of a run up, sitting at 155. And the ETFs, man, they have blown it out of the water the last 2 days. I've got the chart up here from Farside. Total for the 3rd of May was 378 million. Yesterday, we had 217 million. And again, we have two positive flows for the very first time for GBTC. Still see some good action coming in on IBIT as well as Fidelity, although it looks like IBIT's slowed down considerably. So, JJ, walk us through what you're seeing here. I mean, like I just said, you've got this outlook and some of this background information that sounds positive. I think there was expectations last week with, wow, we're definitely going to be sitting around the 50 50K range, and then now we're sitting at 63. I think it went all the way to 64 either yesterday or perhaps over the weekend. What exactly is going on?
Key level that we lost on Tuesday night of last week ahead of the FOMC, 64K or so, 64.5. That's kind of working as our resistance level now, right? So we kind of found, seems like we found the top of this range, at least for this week. We'll see how this plays out, but it seems like we're kind of in a range. We'll probably come back down, keep retesting between 62 to 64 or so around this week and just form a nice consolidation pattern here. And it looks like it's been a reaccumulation, which is encouraging, right? Like we see these ETF inflows turning positive after they'd been negative for so long. So it seems like the market's kind of gearing up, building a foundation for that next expansion that'll hopefully come towards the later half of May or in June. So it just seems like we're in this range. Just take it for what it is. Don't over leverage yourself. Know that price is going to probably be moving back and forth here for a little bit, at least until next week's CPI, most likely. But it's just finding a consolidation, hopefully building a higher low here. And
Yeah, so walk me through. I want to get a little bit deeper. You talked about sort of the panic hedging, and I know offline before the show we were talking a little bit about the article that you just put out there. I mentioned a gamma squeeze. You said, well, it wasn't quite that. So what was happening with some of the options activity and the dealers that was really trying to add some pressure here? I guess even within the range to see a little bit of an explosive move north.
So what happened last week is dealers were short a lot of 60K and 59K puts, which meant the market was long them. So when price fell below that level, dealers had to hedge, and they had to hedge by selling perpetuals. So that's how we got such a drastic move in a matter of minutes. Like the second we lost 59K, it basically fell to 56K in minutes, and that's just because that excessive selling was necessitated. Like they had to sell at that point. Once price went below 59K, in order for them to remain delta neutral, they had to sell positions. So they had to get short futures positions on. And at the same time, you also had this panic hedging effect where people who weren't hedging their Bitcoin exposure when it was above 60K, all of a sudden price fell below the lows of April. And they said, okay, I need to have some protection here over the next couple of weeks. I don't know what FOMC is going to bring. I need to buy some put options just to cover my tail risk, right?
Mm-hmm.
So you had this effect of everybody buying insurance at the same time, which drives up the insurance premium. So if you looked, if you typically measure like the cost of a out of the money put, which is a short option, and the cost of an out of money call, which is a long option, most often calls are going to run about 5%. They're going to cost you roughly 5% more than the puts because markets tend to go up, right? But in this scenario, and this happens when we have kind of these crash scenarios or anytime there's panic in markets, is people will overpay for the puts because there's a rush demand. So that means dealers can charge more for those puts, and at the same time, people are just paying it because they need insurance at any price possible. And that created an opportunity for the people that were long, those people who had thought preemptively and bought those 60K, 59K puts a week or two prior. They took profits on those positions, rolled them down to like 52K puts, 50K puts expiring later in May. And then they sold front end puts. So what they were selling was like 60K puts, 62K puts. And they were, because they were going for such extreme premiums. Like you could have probably sold a 62K put expiring in the middle of May for roughly $7,000 or more last week at the peak of the crash. And now those puts are probably worth 1,000 or so, right? So they made a pretty nice profit just in a matter of a few days by capitalizing on that mispricing that was happening due to the panic hedging. And that kind of brought a relief rally to the markets here. And now we just see it leveling off, like it's kind of finding footing. If we look at the dealers' current positioning, like these green lines here, these are the put options that were sold to dealers. So you see a lot of 60K puts were sold, 62K puts, 64K puts. So the dealers are now long these. The market sold them to them. They're collecting that premium. As the premium kind of dies off over the next couple of days, the price just stagnates here. Those people that sold those puts will collect all of that money, and it'll ultimately be a profitable trade for them.
Okay. That's a deep dive analysis of how the activity played out over the last couple of days. Exciting stuff. So when you say range, what are you expecting this week? What are you hoping happens? Kind of best case scenario as we stay in this range. What are you looking for?
I think we found the ceiling here yesterday around 64.5. I think if price could get above there, obviously that would be very encouraging. And as we see on that chart, dealers are short a lot of 65K calls expiring this week. So I don't expect that to come yet. seems like there's going to be a lot of resistance. So it would really take some kind of a catalyst to drive price over there. Like you need to see a lot of increased spot buying and whatnot. It seems like we're just going to be in this range, like 62K seems like a floor, hopefully. And if that can hold, bounce between 62 and 64 and wait for that CPI report next week. And then I think you'll see the real move start to manifest in the days that follow that. So it's just kind of waiting. Like just know the kind of environment you're in. This seems like a low volatility environment where we had that big crescendo last week and now prices just kind of ping-ponging back and forth in a pretty tight range here, which is good. Like if we can keep these levels here, right, you're just kind of forming this consolidation period, and that would ultimately give a nice base for a leg up if CPI is favorable, market likes the number. You could see Bitcoin making a run back to 70K or so in May, but it's dependent on that.
Okay. That's a good scenario breakdown of what you're looking for. We had a question here in the chat from Nadim. He asked, how will we determine bull traps from a true breakout? Now, you just walked through and said, listen, this was all anticipated. We knew that we were in this range. Then we saw some of the effects coming from the dealers and some of the hedging, but it still stayed within the range. What are you looking for to do exactly that, to say, okay, I know that this isn't a bull trap. We've actually broken out of the range, or vice versa. If we actually do an actual breakdown, how do you know it's not a bear trap?
I would say your line in the sand is basically this 50-day moving average. And what, like you see also this 50 RSI, there's a lot of confluence here with this level. And then also what we pointed out with the dealer short positioning is they're short these. So if price moves beyond this level, they're going to have to start hedging, going long. And you could see price move pretty quickly if it's able to recapture the 65K mark. So if you start seeing increasing volumes as we get above like 64.5 to 65.2, and price starts to move aggressively, I don't think you want to fade that. I think that's probably a good signal that we're heading back to 70K, but you obviously need to see that volume come in. But that's kind of your line in the sand here. So I would look at anything like this, like obviously that weekend price action. You always have to look at that skeptically, like price moves around pretty wildly on weekends, liquidates over leveraged traders. So you don't want to like believe in a weekend breakout, right? You want to see this during a New York session or the overnight Asia hours where price really moves strongly. You'd see increased spot buying volumes, Coinbase premium on there, and you'd see it flip this 50-day moving average, which is, you see it here since we lost it in April. It's been working as resistance. So you see this flip on high volume. That's pretty much your signal that we're off to the races and heading back to 70K plus, possibly new all-time highs.
When you say flip, it really needs to see a daily close right above it, and then even come back and use it as resistance to really give that confidence.
Yep. You'd either like to see like one of these massive green candles that just shoot right through it, or possibly something like this that like we saw in January where price kind of tested it for a while, consolidated around it, and that ultimately gave it a nice base to spring off of later on. So one of two things, either just a quick surge, which could happen due to the dealer short positioning there. Like as we said, they're short 65K calls basically through the end of May. They had these short call $60K, and you could see that to the upside here, but it's dependent on this level.
Well, I want to actually go out to the end of the month, because obviously we just had the end of April wrap up, and obviously as we transition to May, we just had this explosive move within range. When I was looking at the positioning for the end of this month, I saw a massive amount of interest. I think it was over 3 billion in notional value, and then the spreads, 50K was a magnet, 80K was even higher, and I think you've pulled that up here. What do you make of that? And then the next question is, does this represent an opportunity, a fat pitch, as you start to see this play out, given what we just saw last week?
I think this, like, so if you look at these are basically resistance for the most part. Like price is going to have a hard time getting beyond any level where you see a large green bar or a large purple bar here. It's because dealers are trading against that. So it's going to take some kind of a catalyst to extend price beyond that level. Otherwise, you'll see it defended. So it seems like when I look at these positionings like this 50K put, these were people that were long the 60K and 59K puts last week. They took profit, rolled it into these, and then they sold the shorter dated put options, 60K and above, expiring like this week, next week. So that's just kind of a role play where they just took some profits, rolled it into that, and then sold in the money put spreads. Looking at the calls, I just think price is going to have a hard time getting past 65K in the near term until there's some kind of catalyst. That could be CPI next week, right? So there's always these kind of looming things on the horizon. I think May 15th is the deadline for those 13F filings. So if some institution that we weren't previously aware of declares that they have some massive Bitcoin holding, that could be a catalyst event that sends price higher. But I think the odds are in your favor if you're just betting on a range in May, just due to how much resistance this is. And if you look at the chart too, it looks like it needs some consolidation here or at the 50-day moving average and just kind of form a base for a little while after all that momentum we lost. And that would set it up for a nice run in June. So I think that's kind of what we're leaning towards in May, based on how much, like, anytime you see large open interest, that's just a whole lot of resistance because there's somebody on the other side of that trade that doesn't want to lose money. So it's going to be difficult for price to get above there in the near term.
Okay. So not necessarily a fat pitch, really just giving you a better sense of what price levels would likely see some defense at some resistance.
Yep. The fat pitch would come if we do get like this lengthy consolidation period throughout May. We're just kind of chopping between 62, you form a higher low at 62, and you kind of form a base there at like the 50-day moving average. You start to see this kind of play out again, like what we saw in January. Then this is your opportunity to really go long on out of the money calls for September, December. You buy those up and then ride the upside on the next expansion move. But I don't think we're there yet. Possibly next week, but it doesn't seem like it's imminent now. So
I was going to say we definitely want to be talking about positioning at the end of this, because we've talked about a couple of opportunities people can look at for the end of the year, and that may still be on in the card. So I definitely want to get to that. We did have some interesting questions here in the chat. One of them was about if the ETH ETFs are not approved, would that be a catalyst for Bitcoin? Would you see some of the flow move out of people that were maybe long the ETH, were long ETH because they were expecting those ETFs? Would they then rotate some of that into Bitcoin? If you thought that was a possibility, what would you be looking at for in the charts to actually give you that signal?
I don't think so, but that could bring the capitulation event that we've been kind of looking for here ultimately. So like we've been saying, we want to see some volume on this ETH BTC pair. And if this were to drop lower on considerable volume, that would signal to you that people had been holding ETH, expecting it to outperform. And maybe if that ETF is denied or delayed further, that would finally be the capitulation moment. This could drop down to 0.035 or so. And you would see a large volume candle here, right? Like similar to what we saw in previous cycles. So you start to see that volume come in as people sell their ETH for Bitcoin. And I think that would ultimately provide the best long opportunity possible. Like anytime people quit on those positions, it's usually a good time to scoop them up. But remains to be seen. I tend to think that the ETH holders now are, I don't think there's much of an I don't think people are just holding it because they think it's going to outperform Bitcoin. I think these people believe in ETH pretty strongly. So it's just kind of a time-based capitulation here on ETH that'll resolve to the upside once we get some clarity on when exactly the ETF's coming or how that's all going to play out.
I was going to say, I sense, and it's difficult to note exactly how this would play out and what exactly it would look like, but I sense that there's starting to just be these longer term camps. The point you just made was that you have people that, I don't want to call them maxis because that implies a certain kind of behavior in terms of how they characterize themselves and how they communicate with others on places like X. But they are very much strong conviction, high conviction people saying, listen, I'm in Ethereum. I see the ecosystem growing. This is where I am going to make my bet. I'm not looking to necessarily do these rotation plays. Do you agree with that assessment that you're starting to see that I would call it kind of grouping and it's becoming more mature? Or do you still see the rotation play coming from a lot of people in the market kind of just itching to see that capitulation so they can move their funds around?
I think there's always speculators. So on anything, you have people speculating and go, I think ETH's going to outperform or it's going to underperform. We just haven't seen that rotation yet. So it's a matter of waiting for the market to tell you that it's time to rotate and this is going to move. We haven't seen it yet, but I do think it's got a stronger holder base. Like if you can't be shaken out of this chart, what does it really matter to you if it goes to 0.035, right? Like,
yeah,
it would have to go substantially lower, maybe 0.02 before people gave up on ETH entirely. And even then, I think the ETH community is similar to Bitcoin, where you see the drawdowns that Bitcoin's had over the years, and people just don't care. They've learned to hold on to it, and I think ETH has a similar committed community. So I don't think you'll see anything too large there. I think there will come a point, whether it's higher or lower, where you see that volume come in. But I don't think people are going to totally give up on ETH. There's too much built on it.
Yeah, I think that's a good assessment. I think that's consistent with what I'm seeing as well. And I would say something that I find rather positive is it's something from the last cycle, which was this conversation constantly about which of these projects is going to win out. Will Ethereum beat or flip Bitcoin, or which maxis? The question of which is the right money. I'm seeing less of that narrative, and it's a lot more just about trying to see where the market goes and trying to, as you said, you've got people that believe in the long-term potential of these projects, and so they're invested in that, which
I
to
mean,
me
you'll
is
see like
more interesting.
if Bitcoin breaks to 80K plus and ETH is still at 3K, this sinks lower. You'll see like the death of ETH parties and whatnot come back again, and that's probably a good signal to go long. So I don't think
Yes.
we've reached that moment of just pure capitulation in the ETH market yet, but I do think it's coming.
Okay. Well, definitely, I agree. As much as I want to say that it's nice not to see some of these people dancing on graves, I know that there's plenty
It
of
will.
maxis
Yeah.
out there just waiting, just waiting. And this actually is, I think, probably a good time to bring up your video where you're talking a little about signals, about top signals, about getting out of the market. JJ, you have a video coming out tomorrow. It's your next options trading video. You want to just give us a quick breakdown of what it is?
Yeah, it's all about how to look at the market, how to find the top signals in the market, and ultimately protect yourself using options. So if we do reach this kind of parabolic top in 2024, 2025, where Bitcoin's over 100,000 or so, just how to play that from an option scenario. So where you don't want to necessarily sell all of your Bitcoin and not have any exposure, but how do you protect yourself if we do plummet into another bear market? I think anybody that was around in 2021 at the top probably wishes they would have known how to hedge with options up around
Yeah.
60K or so. So it's just walking you through that and how to play that if we do get a similar parabolic top in 2024, 2025, and
Yeah, you're
everything you need
definitely
to know
putting, I was going
in
to say, you
options.
definitely put some salt on my wounds because, yes, absolutely. I'd like to know the hedging strategies. If you're interested in that, it is premiering tomorrow. JJ will be there answering questions. So if you got questions about concepts that are in there, he can clarify those, or he can point you to some of the other videos. I have obviously seen the content. As always, it's top notch. If you're looking for ways to think about this market cycle, as JJ just said, hedge yourself, be prepared for those tops and be able to profit off them. This is something you don't want to miss. So definitely check it out. Like I said, it's going to be coming out tomorrow. I don't think we have it in the description right now, but we will definitely add it to the show notes. If you're following JJ on Twitter, he's, I think, already put some information out there. And again, it's tomorrow, same time as this show premiering. Definitely go and check that out. With that, JJ, is there anything we want to talk about Bitcoin before we talk about outside forces?
Nothing in particular. We could talk about the options some more in a bit, but
Okay.
it's just kind of a range, right?
Sure. Yeah, I know.
We just
I
are
feel like
where we are. Wish it was
yeah,
more
it's a range
exciting.
party. It's a range party. Show up with your pina colada. Just be prepared for a lot of up and down.
Yep.
Sounds like a 1950s dance. Okay, let's get into this. We were talking offline a little bit about CPI and the strength of the Dixie. I looked this morning. Dixie was sitting at 105.21. Oil was at 78.21, and then gold was down. It was still sitting about 2,300. So if you're looking at these outside forces and you're trying to see a catalyst that would actually move us out of this existing range, you talked about best case scenarios. We start to see this devol start to the coiling, right, of this volatility start to get ready, and then help us spring in June. JJ, what are the outside forces telling us? Because it feels like they're again still playing the same game, sitting in the same range as well.
Well, we had a nice breakdown on Friday. So after that job report came out, it showed people are obviously losing jobs due to the strength of the dollar. Everybody's kind of in this cash hoarding mindset, expecting something bad to happen. So that sent Dixie lower in anticipation of rate cuts coming, right? And that the Fed finally got what they wanted, which is pain inflicted on the economy. And now you see the Dixie weakening. It fell off pretty strongly. It's lost a lot of the momentum. So we see it below the 50 RSI mark for the first time since March, which was when it was plummeting down towards the lower end of the 100 range. So this is kind of a good setup. It wasn't going to just fall off a cliff entirely in a single day, but it's setting up nicely. It's kind of making a rebound bounce here. And what you'd want to see it is reject from 150 or 105.50 or so, and then start to trend lower. And then hopefully the CPI report next week comes in lower than expected, maybe we get our first negative CPI in a while. I think that's what the Cleveland Fed is forecasting, is a negative CPI. So if they're correct, I think you could see Dixie finally fall below all of these moving averages here and make the plummet and ultimately resolve itself lower back towards the yearly open levels, which is around 100. And it could finally undo this force that we've been talking about, like the strength that Dixie's just been weighing on markets. So if we see Dixie relent now, we see rate cut expectations come back into play. They were almost entirely priced out over the past couple months. So if we finally see some kind of disinflation readings in the market, I think Dixie will react strongly to the downside, and that would be your green light for upside in Bitcoin. Then you could see that rally to 65K and above and ultimately new all-time highs. But it's centered around, I think that's going to be our pivotal thing for May, is the CPI report, and then we take it from there. But that's seems like the market's waiting on that, so we'll probably be chopping at least until that CPI report comes, and then that might be the moment to lift off. So keep an eye on.
Okay, I've got two follow-up questions there. One, if you do see the Dixie really start to cool off, approaching that 100 level, what is the time frame that you expect that to play out? Is it a quarter? Is it 2 quarters?
It would probably be by the end of summer. Like if you look last summer, let's see here. So July, like it's typically a weak month for the Dixie is the summer months. And you could attribute that possibly to oil. I think oil is seasonality is very bearish in the summer months due to, I guess, people don't use gasoline in the summer. I don't know what it is. Less,
Well,
less
they do,
people
they do,
travel.
but
Yeah, yeah.
okay, go
Less,
on, go on.
yeah. People are all for it. Whatever it is, oil just tends to go down in the summer months.
Yeah.
So, and we know there's that correlation between Dixie and oil. So you could see this kind of scenario play out again, like as we saw last summer. It fell lower at the beginning of June. It started to trend down, and then it just totally fell off a cliff in July. And that would be an ideal setup. Like I think we could possibly see something similar like that. Maybe it breaks down next week, comes back and retests, and then over the course of June through the July, it starts to fall back down sub 100. And I think Bitcoin would be well over 80K in that scenario.
So if it took all the way to September, that wouldn't bother you to see
No,
that?
I think
Okay.
that's like the longer it takes, as long as it's in a downtrend, right? Like if it loses these moving averages and then it's just kind of chopping, but in a
Mhm.
downward trend, I think that's ultimately what you want to see. The longer it takes for Dixie to reach a bottom, like you kind of want to see these. You see how like fast this fell, right? And then the rebound rally was much fiercer. So you want to see it walk down gradually, and that gives risk more time to run before Dixie ultimately rebounds.
Let's play the counter trade or the counter scenario, which I think is perhaps scary for some. What if that CPI report doesn't come in as weak as the Cleveland Fed is expecting, and in fact, we actually see some continued high inflation reads, really showing that inflation is way too stubborn for these rates at this existing path? What do you think is possible in that scenario for the Dixie?
I think you would see it hinted in the days coming. Like I think you would see Dixie reclaim 105.50 to 105.70 probably by Monday, and you'd start to see a trend over here. And then that CPI report would send it to new highs. I think we'd be above 107, and we're back in that liquidity Armageddon type scenario that we've been discussing. Maybe we fall to the 200-day moving average in that scenario over the course of May through June. So that opens up the downside. Like if Dixie makes a move and it goes back above 106 to 107, it starts to trend higher. Market totally prices out rate cuts once again. I think we're back in that doomsday where we're just that would turn this into a lower high, and then that would ultimately give way to a lower low, probably around 48 to 52 first target there. So let's
So
hope not.
yeah, definitely an interesting scenario. Well, I guess if you've got powder on the sidelines, it could be a great opportunity to finally get in, and perhaps even lower if that pressure builds for a period of time. But obviously, we got to monitor that. We don't know what the CPI print is going to be. We don't know necessarily how the market is going to react if it does come in hot, right? And
Yep.
how long the Fed and the Treasury would allow that pressure to build before we start seeing some real cracks in the real economy.
So if we look at the December rate expectations, the futures markets, I think you would see these probably plummet below the lows of Tuesday, and that would really be a risk off signal. Like that's probably a sign that Dixie's heading much higher. You see these fall back below. They made this nice recovery, right? Since the FOMC saw a lot of buying volume here. This is basically the market betting on rate cuts by the end of the year. The higher this goes, the more rates cuts they're pricing in. So if you see this start to plummet again, Dixie run hot, that's kind of your warning signal that, hey, we're heading to 52K or so. So prepare. But yeah,
Okay.
I think there's a lot hinging on that CPI report next week, just based on market positioning and the way all these charts are quoted. Like you see Bitcoin's resting here at the 50 RSI, like we said, the
Yep.
50-day moving average as well. Like it wants to make this move higher. It just needs the green light from Dixie, which is resting on also on the 50 RSI on the daily, and it's got all these moving averages here. So I think you see this break down, you see Bitcoin break up, make that race, and then conversely, Dixie regains this trend. I think Bitcoin's heading much lower, unfortunately.
Well, that's the reality. Of course, depending on your time frame, if you're going to be around here for 10 years, maybe you don't care because you're just waiting for the big capitulation candle to happen sometime between now and
Yeah,
2030.
it's stupid. I'm not saying I like it, but that's just the way the market works.
Yeah.
You see these
Hey,
setups enough
we're
time.
here for reality. We're here for reality.
Yeah.
Okay, so we've walked through where we are. We continue to be in a range pattern. Nothing really surprising there. We may see some burst up or down based on maybe how people are positioned from an options perspective. We're really looking for those outside forces to be at that catalyst that's going to take us really outside of this range. And so I think with this, though, we could talk a little bit about positioning, because I know we have a question in the chat which is asking about how people can be thinking about positioning if they're in jurisdictions they don't have access to some of these crypto options. Obviously, we can talk about plays that we can do today and maybe explore a couple of different ones. Definitely, before we do that, I want to give a shout out to everyone who's in the chat. Thanks for joining us here every Tuesday and Thursday. If you haven't already, definitely hit the like, subscribe button, hit the notification bell. I believe there is one, although I'm not seeing it on my screen, but that's the best way to get notified. Although we do this show every Tuesday and Thursday, so you should be prepared, be able to join it live. Obviously, then we have the recording afterwards. And I have to put it out there. If you're interested and you can do some of these options that JJ talks about in his options video, definitely check out the link in the description for CoinCall. It is the exchange that he is highlighting in each of his videos, and we talk about on this show, where you can trade perps, you can trade options, and you can trade spot for the biggest majors in the crypto markets. Definitely a great place to start your options journey, whether you're doing paper trading or starting out with a smaller account. It is the place to go. Definitely check that out. Link is in the description. Okay, JJ, I want to bring it back. We talked a little bit about some of the questions that I'm seeing in the chat. One of them was about, where do you go if you're unable to actually trade these? So for example, maybe you're in a jurisdiction that you can't open a CoinCall account, which is unfortunate. That is beyond our control. How do you think about being able to play those options?
I think you would just set up a brokerage account. Unfortunately, you have to play by the rules of the system you're in. So you just go to Robinhood or Thinkorswim, Interactive Brokers, and then you could trade Bitcoin futures options. BITO is the signal, BITO, and those, it's not a perfect 1-to-1 ratio of the way they track Bitcoin's price, but it's close enough. It's not ideal, but it's a workaround. You could also trade things like I'm big on trading options on miner stocks, MicroStrategy, etc., because they're basically leveraged Bitcoin, right? So you have a little bit added risk there. It's more leveraged, but again, you have the options potential, which you can't get in the US, unfortunately.
Yeah.
So it's a way to work around it.
I was going to say, it sounds like in the US, also in Canada, it seems like they've had issues with some of the people that have been on our show. They've talked about that. But in terms of drawbacks, obviously, I think the best option is you've got your asset, let's say it's Bitcoin or it's Ethereum, then you're able to use that as your collateral. In this scenario where you have a brokerage account, you really still have to use fiat for the collateral or the actual asset, which in this case would be BITO. Is that accurate?
Yeah, that's a difficult part about it. Like if you hold spot Bitcoin in the US, you can't trade options against it, which is very difficult. Like you can't, kind of the advantage of options is if you own the asset, you can sell calls or puts against it and harvest some yield, and it makes it much more difficult in the US, and that you would have to buy some of those Bitcoin stocks and trade options against them, or just trade directionally options.
So the play is still directionally the same. Obviously, the collateral is a little bit different and perhaps not as much juice to the upside, but that is the synthetic way that you can actually get access and exposure to some of these trades.
Yeah. Yeah, you can still trade. It's not as efficient, right? In a perfect world, we would have access to these things, but our regulators have deemed otherwise. So
yeah.
it's unfortunate.
So I think light signatures, hopefully that gives you some idea of ways you can think about playing some of these trades. I know it's not ideal, unfortunately, until the SEC and other regulatory bodies deem us fit as citizens to be able to get access to these financial products. We have to play by the rules that they set out. Hopefully at some point that changes, but I'm not sure I'm overly optimistic. We had another question, a request in here from Mr. Dan saying, can you please add a volume analysis for upcoming weeks and possible options trades and strategies for this period? Mr. Dan, we definitely, every single episode, we definitely talk about option trades and strategies. So you haven't already, definitely check out the end of all these episodes. You can jump to the links. We had chapters for all of the videos, and you should be able to see the options trades that JJ is saying are possibilities. In terms of volume analysis, do you know what he means by volume analysis, JJ?
I'm not sure if he's discussing kind of like this, like the volume chart. This is Coinbase. So you can see we've kind of been on lower volume since we reached that high. And what you'd like to see, at least what I'm looking at, is for a break of this 50-day moving average on volumes, kind of similar to what we saw in February and March as we gain momentum. So that would be an encouraging signal. Likewise, if we lose that 62K mark or so on increasing volume, that would be extremely bearish. So those are the two
Okay.
kind of things I'm looking at. But while we're in this range, 62 to 64, I wouldn't expect much volume to come in here. I think
Yeah,
it's kind
Mr.
of
Dan has clarified he's looking for volatility analysis. So I'm thinking DVOL.
yes, I could pull that up.
Yeah, let's pull that up. While you're doing that, Hello World asks, could you use MicroStrategy as a proxy example to hedge BTC and options at some future date? I think in general, Hello World, I'm going to speak for JJ on this one. I think the answer is yes. It's the best you're going to do as a synthetic proxy. You do have to be aware of some of the additional risks that come in for these equities. They have a different reporting schedule, and obviously the holders of them may have different expectations that could drive that. But in general, I would argue that holding MicroStrategy could be used as some kind of hedge for your Bitcoin. JJ, do you agree?
It's a lot more volatile. So if you're
Mm,
using it, like if you're going to say, okay, I'm going to hold spot Bitcoin and buy MicroStrategy puts, you're going to be paying a lot of premium on those puts due to how volatile the underlying stock of MicroStrategy is. Like even when it's not as volatile, the pricing on it, like the moves it can make, because it's basically leveraged Bitcoin, right? And Bitcoin's volatile in and of itself. So those moves that MicroStrategy makes are a lot more drastic, and the options market's priced like it. So you're going to be paying more for options if you're looking to short it as a hedge. So beware that. But it's good for harvesting volatility as well. Like when it's in these ranges, you could go really deep out of the money and sell calls or puts and collect those premiums because the market makers have to charge a large amount due to how drastic it moves.
yeah. Okay, well, hopefully, Hello World, that gives you some idea. It's not, again, because it's a synthetic, we're not able to use the underlying collateral. There's some pros and cons to it. It could obviously, because it's more leverage, could give you some upside gains, as JJ was just pointing out, but definitely something to be aware of from an efficiency standpoint. You just got to be really looking at how you're setting up those trades. All right, so on the volatility side, we'll cover this, and then I want to get a little bit more into some actual positioning from an options perspective. What are you seeing here from a volatility standpoint? And how does this play into some of the analysis we've already talked about in terms of what you're looking for going May and June?
It's very healthy. So what we're seeing now is just kind of, again, leading itself to the fact that we're in a range, very low volatility. This is showing us that the market's not expecting too drastic of a move. Like it's been in this downtrend since we reached the top in March. And obviously you just see it fell off a cliff in April. And then we had that kind of squeeze bounce back as everybody was panic buying puts last week and then ultimately reverted back to the lows. So this is good. It's looking similar to January when we saw that large run up ahead of the ETF. And then again, it fell off a cliff and kind of consolidate for a bit and made this next leg up. So this is ideally what you'd want to see. Again, it's just another thing that's kind of signaling that the market's waiting for some kind of catalyst event to send it higher. And this is a good time to start looking to buy volatility, I think. I think anytime you're in these lows of this range here, like we've had, we see how drastic it can move in a short amount of time, right? And if you look at the term structure chart, let me pull that up. So this is encouraging in that for what we were seeing over the past month or so was a constant inversion in this, in that you'd have front end spikes, especially last week, like May 10th expiry was jacked up. It was, I think it was above like 60 or so on the IV, as where the rest of the term structure was lower. So that's because the market was panic buying so many short dated puts that it sent things out of whack. And now we see that normalizing. And it's turning into this positive sloping curve, which is a good signal that we've had this reset in the market. Like, again, when we saw that up move, how violent it was, how quickly it went from 40K to 70K in just a short amount of time. It really jacked up the premiums on those options contracts. So people were way overpaying to have that kind of exposure as we headed into the halving. And then all of that euphoria has been sucked out of the market. And like we said, it's just kind of building the space to where if the macro plays along, we could see a real reacceleration to the highs in June, possibly. And I think you want to have some kind of exposure to that, as especially as we're down here at these levels. Like, I don't think this is going to fall much lower than kind of where we're at in near term.
All right. Well, hopefully, Mr. Dan, JJ did a textbook analysis of volatility, give you some perspective on where it's sitting and how you can think about that in terms of your trading strategies. So JJ, let's use that to pivot and talk a little bit about some options trading. We were talking earlier about a little bit of waiting for the market to really maybe react to that CPI report that's coming out next week, I believe. So, but beyond that, we've talked several shows about looking perhaps longer term, both on a Bitcoin perspective as well as Ethereum perspective, looking at trades that are all the way in September, maybe December. So walk us through from a Bitcoin perspective, what that might look like.
Yeah, I think last week we were discussing these 70K Bitcoin calls for the end of December. I think they're trading around 9,000 last week. So we've already seen they've had a nice bump up. And as we were saying, like, you could sell shorter dated volatility against this. So if you own this 70K Bitcoin call expiring at the end of December, you could sell a 70K June call for $3,000. And this lowers your cost basis to 9,000 or so. And then you're hedged through June. If price does nothing for the next month or so, you collect that premium and you still have your longer dated call in case the price expands in the future. So I think that's still a good thing while we're in range. If you start to see price get above 65K or so, you start to see that acceleration happen, the spot volumes come in, you might want to close out that short call and then just be directionally long. But this gives you that flexibility to where you can kind of, you still have your longer dated exposure, you're fully covered through the end of December, and then Bitcoin obviously runs to 100K. These will be worth a pretty substantial amount of money. And as we were saying, like, these were trading for roughly like $30,000 at the peak back in March. And you see how much that volatility's died down and how the effect that's had on options contract pricing, and that they're very cheap now relative to the move Bitcoin can make in the future, because options are priced based on what's happening now, not what's going to happen 6 months from now, right? Like, there's just varying levels of probability, and the longer we stay in a range, the less premium you're going to pay due to the amount of volatility that's sucked out of these contracts, and that provides a buying opportunity. And we've seen a lot of people buying up September and December calls over the past couple of weeks. So it seems like this has been a healthy reset for the market. And like we said, it's just kind of waiting for a catalyst to surge it higher. It's just waiting to see when that'll be. Maybe it's May, maybe it's June, or maybe it's in the second half of this year. So I think you do want that exposure just due to the risk reward. Like we said, if we start to lose 62K on volume into the CPI next week, that's kind of your warning signal. But as long as we're above it, I think you do want that longer dated volatility. And again, you could hedge yourself. The put premiums that we were seeing last week have fallen off pretty drastically. So if you go to like May 24th, these 59K puts are only trading for 1,000. And that's a good insurance policy, because if Bitcoin does break down, if we get that ultra hot CPI report, sends us into that liquidity scenario, you could see Bitcoin fall to 50K pretty rapidly. And then you would have these puts, and you could basically do what people did last week, which is profit off those shorter data puts and then turn into a put seller and collect that premium. So I think it's providing a lot of opportunities in both directions here to hedge yourself and have plenty of exposure to volatility in the coming weeks.
I want to ask, how does someone think about, perhaps they have both assets, they have Bitcoin and Ethereum. How do they think about playing this from one or the other? For example, can they run the exact same scenario you just talked about on Ethereum? Is there some rationale to talk about a rotation? Or is it perhaps the case that Ethereum has actually more room to run, especially if we have this scenario where we have the first decline on the ETFs, and the market starts to really start to price that in if it's not already there?
What's really interesting about ETH is that its volatility has been substantially higher. So we see it trading at ETH IV score of 68 as opposed to Bitcoin, which is in the 50s right now. And this has been pretty consistent over the past month or so. And I think that's due to a lot of people hedging. So we've seen a lot of put options being bought in the ETH market due to people kind of fearing this capitulation scenario where ETH drops lower. And that's causing the puts to trade at premiums to calls for ETH. So it's kind of, I don't know if it's still in that backwardation, but it has been uh, for much of the past couple months or so. And that people are really, really fearing that this is going to be a capitulation moment for ETH and the bottom's going to fall out. But the market's protected for it. So that's kind of like Schrodinger's capitulation event. If everybody's expecting it and fully hedged, it's probably not going to happen. But we'll see. But I think you go longer dated ETH options. I think those will pay off as well. If Bitcoin ultimately does make that breakout, goes to 80K or higher, it might take ETH a little bit to catch up. But ultimately, I think it would go to new all-time highs as well, above 4K. So if you look at the December call options, I think anything above 3,500 in the coming weeks, you should be eyeing 3,500 to 4,000 strikes, buying some calls there. And again, if you're scared of this capitulation moment, you could sell shorter dated calls against it expiring in June and just wait till you have confirmation there, and also buy some May puts in case that capitulation event does come in the next couple of weeks. You could look at like 2,900 puts. They're only trading at $88, and that covers your downside or pretty low capital into the
Yeah.
CPI report and whatnot.
Fairly efficient way. So really, I mean, it sounds like the Ethereum play isn't quite as juicy as people may expect it to be because the volatility is a little bit higher.
Yeah. Yeah, you're going to be paying a bit more for that, but it'll come. I think Bitcoin is going to be the first mover. So I would concentrate my focus on there for now. And then ultimately, if we do see a breakout from Bitcoin, you can parlay those gains into ETH calls because it'll probably be a bit of a laggard. So I think that's a good way to play it. Is you wait for Bitcoin to confirm that it's going higher. And then if it does, take some of those gains and start buying ETH calls with it.
So, okay, so that's a breakdown both from a Bitcoin perspective, Ethereum perspective, being able to use that collateral to actually place those trades on an exchange such as CoinCall, where it's all native. I think the last question I have here, from a positioning standpoint, if someone is looking to play that same trade, they don't have access to these exchanges, perhaps they're a U.S. citizen, and they're looking at something like playing that on MicroStrategy or playing it on the miners. Is the risk here substantially different? We talked about that. I just want to revisit that because I do think if you're thinking about these synthetics, you really do need to be prepared for more explosive movements, perhaps. But walk me through how you would think about that from a risk perspective. If someone was saying, "Hey, I'm thinking about placing this trade, doing the exact same thing, but it's not directly with Bitcoin. It's going to be with, let's say, mining stocks."
Yeah. So if you're looking at Bitcoin, right, like you have to kind of project where Bitcoin's price will go and then the effect that'll have on these. So it takes things a step further. You're kind of playing like 3D chess, I guess, as you're trying to piece that together. But you figure, okay, Bitcoin gets above this level of resistance here, makes the breakout above 72K. Where does that put these stocks, right? We'll just pull up MicroStrategy. So if we look at it now, MicroStrategy, obviously it's looks similar to Bitcoin. It's below the 50-day moving average. It's lost a lot of momentum. And again, this looks like something that needs to consolidate a bit. So nothing here is pointing that it's going to break out substantially higher. So I think what you would wait for is ultimately Bitcoin. I think it'll take a bit of a lag period. So if we overlay Bitcoin on top of this, it'll probably be a bit like Bitcoin will start to trend higher as it did. Like we see it bottomed in January. And then Bitcoin started to trend higher. MicroStrategy didn't really make that big breakout move until Bitcoin was much higher. So you start to see Bitcoin break above 65K. These charts start to look like they have some room for upside. Maybe it gets this momentum here around 1400. And then the ability to move, obviously, due to the short interest and how many people are actively selling. But like as we mentioned before, these contracts demand a lot more volatility because of you get these kind of moves on them, right? Where they go up in a straight line and down in a straight line. So options dealers have to sell them for more premium, and that creates the ability for people to step in and harvest that yield. But then when it snaps back, they have to cover those positions pretty rapidly, and that's how you get these really kind of, it's like a self-reinforcing volatility model where Bitcoin goes up in any drastic way, the effect that it has on whether it's miners, MicroStrategy, Coinbase, etc., they move in a more drastic fashion. So Bitcoin goes up 10%, these are going to go up 20, 30, 50%, right? So you start to project that forward. Bitcoin starts to break out above 65, 67K, and it goes to say 75K in June. That probably puts MicroStrategy at 2,200 to 25 or 2,500, somewhere around that range, maybe even more if the if those shorts really start to get squeezed and forced to close out. You could see something pretty drastic happen again, as we saw in February when that massive squeeze played out. So just be aware of that. And I think it gives you an opportunity, especially as they consolidate and those volatility levels fall off relative to what they were during this parabolic period here, right? Like if you want to buy a call that was hundreds of dollars out of the money, you're having to pay a few $1,000s for those. That's not the case when volatility compresses as it has been in the past couple months. So you'd be able to get out of the money calls, say above 2,000 on MicroStrategy for probably a few $100. And if you feel like Bitcoin's going to make that move to 70,000 and above, and it's only at 65K now, the market's not pricing it in yet, you can front run that kind of short squeeze scenario on, be it MicroStrategy, the miners, etc., and really catch that beta run to the upside. And you get pretty quick gains there, but it has to be kind of pinpoint precision. Like you see the second Bitcoin starts breaking out, that's really when it's like, okay, time to go. As soon as
These are
starts
really active positions. You can't just rest on them. You really have to actively manage this.
Yeah, very much so.
Yeah. And as we were talking about earlier in the show, that CPI print could really be a catalyst up or down, depending on what it gives us. In fact, someone here in the chat mentioned, Paul J says, Kashkari from the Fed says monetary policy may not be as restrictive as thought. So we may start to see some of those indications that things are going to change. But again, you got to wait for that data and then obviously realize that someone's probably been able to front run that. JJ, any other positions that you'd like to discuss before we wrap up today's show?
No,
or are you just
I
stuck on Joker because you're just so happy talking about some of these opportunities?
Yeah, I think if Bitcoin does make that move, keep an eye on the beta plays, like we were discussing a couple of weeks ago. The miners continue to look strong here. A lot of people are covering their shorts. It has earnings this week, so probably some more chop as we head into that. But if Bitcoin does ultimately break out above 65, 67K into May, into the end of June, I think you'll see pretty strong moves. Like this is the Mara BTC chart. You can see this thing just wants to rip higher. So it's just waiting for Bitcoin to give the green light, and then I think you'll see some outsized gains on those beta stocks again, but dependent on CPI, obviously. So be aware of that risk heading into next Tuesday, and also be aware of how quickly things can accelerate if the macro plays along here in the next week or two.
Well, there you have it. You have JJ's PSA on how to be thinking about this positioning in this market. We're in the crab walk, but don't be surprised if we see a breakout up or down and finally get that capitulation of the market to say Bitcoin run hot. JJ, I want to thank you for dropping by, dropping all of this alpha. I want to thank to everybody in the chat. We really appreciate you stopping by. Definitely be here every Tuesday and Thursday. And tomorrow, if you're interested in getting deeper into how to think about these options, be there tomorrow for JJ's video where he's going to be there for the premiere. He can answer some questions. I'm going to leave you with the same PSA I do every week, every day. Have some dry powder. Those opportunities are coming. You're going to want it. This is Marconi White signing off.